The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 24th. Terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to cut through the weeds. We'll figure out exactly what they're communicating to you and I as of about 1:05 in the afternoon. But the most important thing, the absolute most important thing, is for you to know how grateful I am for your presence here. Hey, whether it's live, whether it's on Memorex, maybe you're listening to the archive, I'm absolutely grateful for your presence here. Of course, live, go ahead and give us a call at 877-927-6648. Internationally, you can call us at 727-445-1044. This is Terrific Thursday, of course, none other than the Hotel California, sponsored by Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 208 points. She's trading at 16,071. That's off by about 1 3/10%. The S&P is down 22 points. She's trading at 1916. Also down a little over 1%. NASDAQ off 1 3/10%, trading out at 46.89. That's off 64 points. New York Stock Exchange down 1% as well. Goldilocks moving to the upside, up nearly 2%. Silver up 2 3/10%. Light sweet crude is flat. She's trading at 44.65. Looks like natural gas back just a tad. So where do we begin? Well, where we begin is let's go begin with the markets. You know, yesterday, you and I, together, we were taking a look at that low volume day inside the market. But we said, wait a minute. There's something subtle that the market is communicating to you and I. And that subtleness has turned into what it was communicating. We took a look at the summation index for the NASDAQ composite. We're going to blow that up on our screen here because it was the volume inside the Qs that you and I spent so much time on. Of course, we spent time on the volume everywhere. But when we took a look at the NASDAQ specifically, what you and I had noticed was that on September 22nd, couple trading sessions ago, it was the first time that that price oscillator had moved just below zero. Now, moving just below zero or just above zero should never get your feathers unwound. I don't know if you can unwind feathers out there. But the very next trading session is the trading session where if you were playing Texas Hold'em, there is the tell. And the tell, when we came into the close yesterday, very little price movement out there, but that price oscillator finished below zero for a second day. Never a good sign. So even though we had that light volume, and now remember, it was the New York Stock Exchange and the Dow. I'll put the Dow up on my screen. We'll flip back and forth between those. Yesterday was the first day down for the Dow. Closed just below it. I do mean just below it. But today, more follow through to the downside in the Dow. So volume or not, it doesn't matter. It tells you clearly, and of course you don't need Stevie to tell you who's in control of the market, but it tells you clearly now because we have follow through New York Stock Exchange, finished just below zero. Look, it would have taken nothing. It still would take nothing for the bulls to make a run to the upside because it was like about 200 and some odd issues that would be needed in order to get that price oscillator back above zero and keep that trend, at least at this stage of the game, moving sideways. But no, that is not what happened out there. So now we've got day two. This is day three inside the NASDAQ composite. Now, what the NASDAQ composite is also doing is worth noting, worth paying attention to today. That magic number of the high from August 24th, that's the swing point. 46.94.90 is the number. You're trading at 46.89. We'll go take a look at volumes out here, but to a certain extent, volume schmolium, unless we've got major volume to the downside out here. You're closing inside that swing point, and many people. Actually, I'm so busy during the day now, I don't get a chance to listen into any of the TFNN shows or any of the other shows for the most part on CNBC. I do some of that stuff in the evening. But many people are calling, so I'm not sure what everybody else is calling for out here. It really is my point, with the exception of what I hear while I'm working out or something along those lines. And most people are calling for the retest of the August 24th level. Then the NASDAQ closes underneath that high of 46.94.90. I'm going to say, I'll go ahead and stretch and say, forget about the retest of the August 24th low. What you should be looking at is more likely than not, those lows are going to get blown out, which will be pretty hard because of the volume down there. But that's really what the market would be communicating to you and I. Now, why would it be communicating that to you and I? What I will do, it's only September 21st, right? No, September 24th. So we've got you got 6 more calendar days, right, till you get to the 30th. And what you and I are certainly going to be focused on and paying attention to is going to be these trend lines out here. But if we take a look at the Dow, and we're going to look at the Dow, the Russell, and the New York Stock Exchange. Let's put the Dow up on our screen out here. Here's the monthly chart. And the Dow right now clearly trading below that rising trend line off of the March 09 lows out there. If that's how it closes the month, the market is giving us the same type of signal after the top, right? To have the top that forms, but it's going to give you that same follow-through signal that there's a lot more downside potential to come over the ensuing months. This is going to take months if we see this trend line broken. Trend lines do matter. If we take a look at the Russell 2000, far from its trend line, but the trend line that you and I are paying attention to is actually the one coming off of the high from 2000, from the high in 2007, and that is a level that is held as support ever since price broke through it on the trading month of September in 2013. How ironic if it actually breaks down below it in September of 2015. What that would set up is at least a test of the larger trend line off of the March lows out there. Inside the Russell, that's around the 1,025-ish range out here. But the New York Stock Exchange is saying to the Dow, hey, hold on a minute. I'm not going to give you all the show out here, because right now, the New York Stock Exchange, look, we already know that it's broken back down below the 2007 highs, that large consolidation. That's never a good thing when you come back, you test, and in fact, you fail to hold that level inside the New York Stock Exchange. Price right now of the New York Stock Exchange is trading right on it, give or take a couple of points or two. So if the New York Stock Exchange in the month of September, and there's a pretty good chance that not only will it trade down to the lows of August, but I'm going to go on record here and say it's going to bust out those lows. So any move to the downside, the lows will be busted through. That's a price point of 95.09. Now, look, this starts to get to be really serious action out here, because when you break those trend lines, if we just take a look at what it's led to in the past, don't let somebody convince you about staying in the market. In fact, what I'd like you to do, just make the easy thing. You just determine how much of a contribution you want to make to the market. Say you're a charitable person and you're willing to make a 10 or 15% donation. Go back to each one of your holdings inside your portfolio. Go take a look at what the high has been thus far. Take that 10 or 15% and say that is going to be your physical stop. You can always get back in the very next day. But I would rather you protect your assets out there than anything else, because breaking these trend lines is important. And look, we don't have to just stay in the United States of America. And you know me to not be the type of guy that, gives you, I don't know. Look, I'd rather teach you how to buy fear than try to sell you on fear. So that's not my style out here. But if we do take a look at other markets around the world, here's the FTSE. The FTSE, which let's just back this up a bit here, right? So there's your consolidating pattern, broke right through, and the FTSE broke through its trend line back here in June. So the FTSE's got some real troubles over in the UK. That trend line is broken. That says that it's going lower over the course of the next several months out here. In the case of the Hang Seng, guess what? The Hang Hang Seng has broken through its trend line now. Broke through it last month. It's just adding to it. So inside the Hang Seng, there's problems over there. So to the extent you believe in a one world market, look, the Nikkei here, I'm assuming we're not going to hand the ball off very well to Asia tonight. So the Nikkei is going to get down and test its trend line tonight. Well, it's got to do tonight, Sunday, Monday. But that trend line, just like inside the Dow, inside the New York Stock Exchange, is under fire out here. So they're starting to fall. If you go back into the U.S., we don't have that same issue right now inside the S&P 500. That's really the next level of support on any move down. That's why I make the prediction, if you will, if you want to call it a prediction, that we're going to bust out the August 24th lows, because once the Dow starts to totally fail, the New York Stock Exchange sends us that failure message. That says to me that price inside the S&P, which hasn't broken its trend line, that's where price will head to. That says it takes out, or at least gets down to the lows in October of 2014. That's what we should be anticipating, expecting, and taking a look at. If we look at the NASDAQ composite, where's it going to head to? Well, it's going to probably push. This is where, if the NASDAQ composite gets rolled, because it's held up pretty well. You've got to admit, even when you take a look at this monthly chart, it's held up pretty well. But if this thing starts rolling to the downside and starts taking out those August 24th lows, do the others stand much hope out here? And so I'm giving you just like we did yesterday. I really think a longer term picture and view, and just take a look at simple things that you can put on your chart to trend line. So what I'd like you to do out there, is just simply go take a look at that portfolio of yours, where you maybe take a look at those trading decisions once a year, if that. You've got 6 or 7 8 different choices. Maybe you've got more than that, with inside your company. Go see where you're at. Go take those highs and just take some percentage. I don't care what percentage, a percentage, and just simply say, if price gets down below this, I'm going to cash, which is a good position out here. Because what I do believe we're looking at, and look, the month is not over, but I'm going to tell you what we're looking at right now. The whole idea is for me to tell you the story of the markets as to what it's doing right now, and what does that mean in correlation to the patterns of the past. It's not so much to totally predict the future. It is to say, if you are one that believes the past equals the future, I know it doesn't for you. I know it doesn't for me, but it does when we take a look at these stock patterns. So you've got to be able to differentiate that now. And that's all I'm asking you to do, is just do the work and make sure that you do everything you can to protect your assets, because I'll certainly give the all points sign that the market has changed, even if that is at 1:30 this afternoon. So that gives it 10 minutes for the market to change. But right now, as we speak right now, that is not the case. Now, that doesn't mean that we're going to not see some buying areas along the way. If we take a look at you're going to have to wait. I guess I just strategically did that as we go into the breakout here. But come on back. Let's go take a look at some shorter term charts now that you've got the longer term view. And we'll go take a look at some of those other things that are busting out to the upside, other trend lines that are under attack. Hey, how about that gold priced in dollars? Right now, right up against that trend line. Could be breaking out. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com, and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 215, S&P's down 23, and so I mentioned a few things. One, I was going to go, well, let's do this. Let's do this in order, so to speak, in order. Let's go take a look at, potential bounce areas, things of that sort. Let's take a look at the 120-minute time frame chart out here. And the 120-minute time frame chart for the S&P futures, we're into the bar that ends in 36 minutes out here. Now, if that bar doesn't take out the low from the prior bar, which, by the way, is priced out at 1897.25, it's at a point where you would anticipate and expect a bounce. Why would I say that? Well, same patterns that you and I have used to call tops and bottoms out here, where price moves either higher or lower and does with less relative strength or weakness. In this case here, price has been moving lower with less relative weakness. Now, we don't have any kind of bullish reversal signal. And with a little high wave candle that took place on the prior bar, the only way that could have turned into a bullish candle this 2-hour session would have been to close halfway into the body of the 10 o'clock session. Then we could have created a three-river, not we, but the bulls. They're just there. The participants in the market are there to paint signs for you and I so that I can tell you the story of what it is that they are telling us. And that would have created a little Morningstar reversal pattern. We don't have that. That doesn't mean that you can't get a reversal pattern. It just means we're not going to get it most likely during the next 35 minutes out here. What it does say, though, that's really important, is that if that low gets taken out, not during this session, but the next session out there, that's a problem. because then this whole pattern here will likely have recycled, which also just simply adds to the fact we probably get to the bottom of August 24th sooner than later, unless price continues to move lower with less relative weakness out there. And I don't know if that's the setup or not. We just simply know what to look at and what to watch. That's inside the ES Mini. I believe that is consistent across the board. The patterns aren't exactly the same. Here is the NASDAQ. It hasn't made its seventh wave, that letter of G on my system. It's only made its sixth wave, so you really have to wait for this one to fail out here, because I'll give the NASDAQ, which is held up strongest, as you and I took a look at, as really being the final straw to break the camel's back, so to speak. But we did see prices moving lower with less relative weakness out here. Now, inside the Dow, it had been moving lower with less relative weakness. Just refreshing the screen out here to make sure, yeah, that pattern no longer exists. So the Dow really did pick up some energy as it moved down. It did make that seventh wave. That says, by the way, that price point on the futures contract for the Dow is priced at 15,910. Doesn't look like it's going to get taken out over the course of the next 33 minutes. And so you get a close below that level between the 2 and 4 o'clock time period, and that just simply is, it's absolutely more bad news of volume or not out here. So we've got those same types of patterns. Now, let's switch over and let's go take a look at Goldilocks. Let's go see what gold is doing. Well, we took a look at it. We just really went to it briefly out here. Of course, you and I know, because nothing gets past you, right? And because nothing gets past you, we were both paying attention to that descending trend line of gold priced in euros out here. Really two things. We got a call from John in Philly yesterday, and John and I were taking a look at, because I know he goes through that commitment to traders data as I do. I think he goes through with a fine-tooth comb. I do it with kind of a brush. I just take a look at about 4 or 5 different vehicles within there, and then I get a feel for what's really going on for those things that I wanted to track, or that I do track, or that I trade out there. And one of those is gold. And nothing could have made me happier than doing this weekend's commitment to traders data. We looked at it yesterday together to see that those large vessels, those large ships, the guys with all of the money, that what they were doing was they were rushing to the door to get on, in essence, the long side of the trade out there. And that's a beautiful thing, because what we didn't really have was headwinds. They were seeing the same thing that you and I were. You know, not many people were taking a look at this, but you and I most certainly were, which was that the price of gold in euros had broken its rising trend line, or its descending trend line. Right now, you've got the price of gold. We can argue that maybe it's broken above, or it's closely, you know, it's very close to it. We're going to know within the next couple of days whether or not there's really any oomph and energy behind it. Now we're going to go measure some of that by taking a look at some volumes and take a look at some of the equities out here. But this is a positive thing. This is an A to B equals CD to the upside. That likely is unfolding today. Price is going to have to get above that trend line out there, and it's going to be a doozy of an A to B equals CD. In this case here, Goldilocks ought to make it all the way up to that larger trend line that is out here. Let me see where that takes us back to. System's a little bit slower, but you know what I'm talking about. It's like another $100 north of where gold is trading right now. So look, when we get back from the break, let's go take a look at the GLD. Let's go take a look at some of those mining equities, see what they are doing as well. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The chart we were looking at before with gold, both price in euros and dollars, that was a stitched together continuous contract. If we take a look at the actual December contract out here right now, we can see that the trend line is clearly being broken. Now, what gold needs more volume. Needs more volume as it heads into this swing point out here from August 24th. Let's go get that same picture just simply by taking a look at the GLD ETF out here. We can see the GLD on the trading session of August 24th did volume of, just move this box over here. It makes it easier for you to see as well. I was going to do that. There we go. Now it'll make it easier for you to see. So the volume on the trading session of August 24th was 18 million. We've only done 5.5 million as of 1:30. Now that equates to, from a straight line method, that equates to volume of about 9 million shares. So 9 million versus 18. You're moving into it with lighter volume, obviously, and you're coming into that descending trend line out here. Even if that gets repelled, stay in the trade as best that you possibly can out here. What I do believe we're likely to see here shortly is we should see an initiation wave of orders inside of GLD, because trading desks around the world have got to see that gold has broken its trend line. We'll see how it closes today, but is breaking its trend line priced in probably all currencies, certainly dollars and euros, which are the two most important currencies for you and I to be able to track out here. Let's go take a look at some of the equities, see what they're doing inside of the market. Let's take a look at Rand Gold. We'll start off with Rand Gold. Rand Gold here forming an A to B equals CD to the upside at swing point that it's taken out from September 18, 2.9 million shares, even 927. So, it's coming into that swing point light as well. Very likely the next move where Rand Gold runs into resistance right around 62.52 to 61.61, the low of the swing point from August 25th out there. So that's where that looks to be headed to. If we take a look at Agnico Eagle, AEM, nice wide-ranging bar today. It is already above the swing point from September 18th. That has 4.4 million shares. It's already done 3.6 million shares. 3.6 million shares at this time of the day equates to about 6 million shares by the end of the day. So you now have a confirmed A to B equals CD to the upside in Agnico Eagle, AEM. That's going to give you an initial price projection, which reminds me, that means I need to go back and make sure I adjust the price projection for my clients out there, subscribers to Mastering Probability. Let me see. What did we had already moved it up once. We moved it up to 27.90. I'm looking right here. Where's 20? No, 25. No, what did we do? I've got to go. Where is it? Target 27.91. 27.91. So 27.91 takes us where it takes us to the high here from August 20th. You can see the 1-to-1 A to B equals CD takes you to 27.02. But this could be, quite frankly, this could be a significant bottom. This could be a very significant bottom inside of AEM as well as inside of Goldilocks. Let's take a look at Barrick Gold, which has kind of been a real dog out here and really continues to be a dog. It still hasn't gotten into the upper part of its lower range, which is back above the August 5th high out here. Nonetheless, you've got good volume off of the bottom, right? You've got 22 million shares today. Yesterday did 16 million shares. So Barrick Gold, you now have a sign of strength off of the bottom. So the dog is starting to look like we're going to allow it back into the house shortly. Let's take a look at Goldcorp. GG is the ticker symbol. This had tested the swing point from July 24th. I wrote about this in my newsletter on Monday, I believe. Really gave a list of 6 or 7 symbols where the tests were just very nice. Goldcorp was one of them. 21 million shares from July 24th was tested with 12 million shares on September 11th. That held back. Price was pulling back on light volume. Yesterday, the volume 5.8 million shares. Today, already 7.2 million shares. Now this is really just in a sideways-ish consolidation. Goldcorp, nowhere near as good a looking chart as Agnico Eagle. A question about Newmont. Let's go take a look at Newmont. Now, you're going to look at my screen and see Freeport-McMoRan down 23 cents out here. I'm guessing if we go take a look at what's going on in the Australian dollar, because when you trade Freeport-McMoRan, you are really trading the currency pair of the Aussie dollar. Yeah, so you can see the Aussie dollar. Now, today, it's pushed off of its lows, but earlier in the day, it was pushing lower, and it was back into testing its swing point low here from September 7th. Now, that's a real problem for the Australian dollar. Only from the longer term standpoint. Let's put the monthly chart on my screen out here, because what the Australian dollar has managed to do it's a bearish signal, and because this is the monthly chart. What occurred inside the Australian dollar is price broke this month, by the way, month of September, broke below the trend line that takes you back to 2001. So a very long-term trend line. Broke below it. This month, after it broke below it, came back up and tried to test it, and it has rejected it thus far. And if it rejects it thus far, and if it closes inside the price point of 0.7015, and you're pretty close. You're actually below it right now as we speak. But we'll give it 5 or 6 more days. But if it closes below that, you're getting down to 60 cents. Now, what that will do is that'll put the ultimate in selling pressure inside of FCX. So if you want to trade FCX, just make sure that you know that you're trading the Australian dollar and have a good grip of what the Australian dollar is doing out there. The question of what is Newmont doing, NEM is the ticker symbol out here. Newmont Mining, the very first gold mining stock that I ever owned. And that will take in the very first exchange that it was traded on was in Canada. If we take a look at what Newmont Mining is doing out here, this is got a decent sign of strength off the bottom. 6.5 million shares after making a low yesterday was 6 million. The day before, 11 million. That 11 million was testing 12 million out here. So, Newmont Mining, you're better off looking at, if you're looking to put fresh dollars to work, you're better off looking someplace else. This is a weaker than market stock out there. I will say there's probably 6 or 7 mining equities that look really good, have really nice setups out there. That doesn't mean that the other ones won't follow. They'll follow along with Goldilocks, and we know where gold is up against right now. It's in essence into that trend line. Let's take a look at the light sweet crude. We were looking at that trade yesterday with Mark in Colorado Springs, and we were looking at the trading session. Well, let's put the USO up on our screen versus the November contract first, because let's look at the actual trade and see where we're at there. It's even up on our screen. So we were looking at that trading session because we were looking at an intraday chart of September 18th. And we said, hey, you know what? September 18th has volume of 28 million shares. And yesterday at about this time when we were looking at it, you were pushing down with big volume, 36 million shares. Now, it turns out that swing point held. When I say swing point held, that's the price point of 1463. You managed to close yesterday at 1444. No, it did not. Yeah, I'm sorry. 1442 was the swing point low, and you closed out at 1444. That still is under attack out here. And, price is, let's go back to the contract now, because that's more important. That's going to be the overriding factor, up about 30 cents. And that says, it's going into a sign of strength. And what the contract has done is it's tested, we'll call it this little junior swing point here from September the 2nd. And it's also tested the point of control on a weekly basis of its TAS market profile, which is priced at 43.89. But you've got some pretty good volume today, too. So I don't know. I don't see the trade there necessarily. We're in a narrow range out here between 43 and $48 or something like that. There's probably some better trades to look at than this one. The better buy is a deeper retracement. And the ultimate buy out here, when I say ultimate, it depends on how price pulls back. You'd love to see it move all the way back into both the weekly and the daily TAS market profile lows between 39.66 and 40.30. That would be the better trade out there. A question of whether or not I can take a look at the chart for one of my favorite places on the planet, and that is Disney. And DIS is the ticker symbol. And love the place. So let's go take a look at the stock chart. Now, we take a look at what Disney is doing. Looks a lot like the market, and looks worse than the market, quite frankly, because in the case of Disney, that big, huge gap down on August the 5th, after it had made a nice, what is a great-looking stock chart, that just simply has fallen apart. Now, let's actually look at this on a monthly basis. So let's just back up for a second. Let's go take a look at its trend line. We can't really look at its trend line off of the March 2009 low because we'll never get to that trend, but we can draw a trend line inside of Disney off of the October 2011 area. And at this stage of the game, Disney still has held that trend out there. Okay, so that's the trend line, the red line that's on my screen. There's several, but at this stage of the game, it still has held its trend line out there. And there's really, look, it's what I know there's a number of prices on my chart out here. What Disney did on that move down into August 24th is it came back into an area where it had recently broken out. Let me get rid of those market profiles. Give me a moment here because that's just clouding up my screen as we speak right now. Okay, so let's go take a look at what Disney did do and what it's doing right now. In the case of Disney, came all the way back on August 24th to a level where it had previously started its breakout from, its most recent breakout. That happened to be the trade. It broke out on February 4th, 2015. Did it with 32 million shares. Now remember, that gap, that breakout, that's your friend. That's where you find out if those same people, those same companies, same individuals, same technical traders, whatever you want to call them, if they're going to go ahead and support the stock, which they have. They did. It bounced off of that area. And remember, you always like to try to come back to the closest swing point. Hopefully you have one within a few trading sessions of that breakout. Well, in this case, we did. It was at $90.06. Price actually got down to a price point of $90 even Steven out there. And then it bounced. And it bounced where? Right into resistance. Resistance meaning where this thing had gapped down on the trading day of August 20th. Now, there's a couple of gaps to the downside. Let's not worry about the 113 level because it's not going back up there anytime soon. So when we take a look at Disney, price bounces right back up to where sellers were camped out. They told us they were camped out there on August 20th. And now Disney is trading into the August 24th swing point. It's going to do it with lighter volume. But if it closes below $100 even, Steven, you're at 99.58 right now. Pretty darn good chance you're going to get all the way back down to at least the trend line. That would be the first place where Disney would find support. You and I just drew the longer-term trend line. That's a red line on my screen. Let's turn that from red to green. That way, in case we go back to this chart here, we won't have color fever out there. So there's that long-term trend line. So Disney is headed back to that trend line. How certain am I? Technically speaking, I'm 100% certain that that's where it's headed to. And if it breaks through that, it's going to head down to $90.06. Will it find value there? Will that find support? It should. It did. It depends on volume. And if that fails there, if Disney fails there, then you're looking at it getting all the way back to October of 2014 out there. So that is on Disney. Did I miss anything in the den? If I did, because my screen on the den is relatively small. If I did, just go ahead and retype it in. I'll be happy to go ahead and get to that. So we've covered gold. We've taken a look at the mining equities out there. We've taken a look at oil. We know what's going on there. Let's go take a look at the euro Japanese yen. Hasn't fallen apart here today, but we know that its level of support has been under attack. It's only a matter of time before that gets tested again. That was tested yesterday, which it did hold. Today you got a little doji style candle. Doesn't mean diddly out here. What means diddly is the price point of the May 26 low out here, and that's at 133.10. You break that, that's going to be a major headwind with regard to price and the direction of price out here. And if you break through that, that says you get all the way back down to the April 2015 level, and that will put major selling pressure on the markets. Now, remember, we want to be paying attention to what the currency pairs are doing out here. And, quite frankly, none of this had anything to do, poor Janet Yellen out here. Look, I know that she, and so do you, you've got to know this too, the decision that she made out there had a real positive intent behind it. She's no different than any other decision that every other human being on the planet makes. And that is that there's always a positive intent. May not have good results, but there's always a positive intent behind it. If there's any one thing, you probably know people like this in your life. They intend to do one thing, yet they do the opposite. What do I mean by that? You know people that from time to time, they want to go on a diet, yet they eat more. Or they want to lose weight. I'm sorry, I should have said they want to lose weight, but they eat more. They want to lose weight and they don't work out as much. Or they want to stop smoking, but they smoke more. They want to stop drinking, but they end up drinking. They do the opposite. People from time to time, we all do this. Or, or maybe is there something, going on in your trading environment? Look, the point that I guess if there was a point that I was going to make, it's that the thing that always stops us from moving forward, or what seems like taking action or massive action out there, is the belief behind positive intent, that you've taken a decision and you've made an action that is only at what I'll call that first level of positive intent, which is universal, which is the need to protect or serve. In the case of Janet Yellen, I believe that she believed she was making the right decision to try to protect the market and things of that sort. I think if the decision was that she was going to move rates up, we'd still be looking at the same type of market out here. So let's cut her a little slack. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Off 167 right now. S&P is off 18. Composites off 54. We're off our session lows out here. Of course, we looked at those wave G counts in the ES inside the YM inside the Dow out there. We looked at how price has been moving lower with less relative weakness out there. It does not change my it does not change the message of the markets that you and I have looked at thus far. So we're in a market here where rallies need to be sold. It really is as simple as that. So we should in any event, that is my belief out there. I saw somebody post something about the full moon lunar eclipse that we're going to have here this weekend. I started to do a chart analysis. This is the wrong one. Son of a gun, where did that chart go? Oh, let me see here. Maybe it's right here. Let me put that up here. Here's my own work on that as to whether or not it really has any significant meanings. If you're looking at your screen on Tiger TV, the very bottom of my screen out here, the lower little spike up, which takes you to a number 2, that's a full moon and a lunar eclipse, whereas number 4, the higher levels, those happen to be a new moon solar eclipse dates out there, just to try to understand if they have really any relevance. Now, what we'll do here is actually back it up into the 2007 highs out here, and coming off of the high back in October of 2007, we really only had one instance. Well, we had 2 instances before the March 09 lows out here, and that first instance took place back in February of 2008. I don't really see anything of any significance out here that show that those full moon lunar eclipse time periods, because I really think we need to go back and take a look at the 2007 and the 2000 cycles out here. Remember, we're breaking those trend lines. There's another reason, which I share with subscribers on Monday after doing the work on it, that make me and I haven't shared that with you here. I can't share everything with you here. Otherwise, what value would there be inside my newsletter? But there was something else that I shared there that, quite frankly, the last time we saw that take place was back in 2007. As the decline started going. So that's why I have even additional conviction, because what you know is these patterns just simply repeat and repeat out here. So as we take a look at these full moon lunar eclipse dates out here, do they really show that you have any kind of significance going on from anything from a bottom standpoint? Quite frankly, in 2007, coming off that high, those full moons lunar eclipses were to be sold. Not bought out there. So, look, that's my read of the patterns inside the markets that are present as we take a look at it. There was a question to take a look at Facebook. The question was, hey, what's going on there? I think what's in the chart looks really good out here. And but the deal with Facebook and some other issues like this that I really think is going on is, look, the reality is managed funds out there, the wealth management group that is out there, they keep that money invested 100%, and they have performed miserably. And I know they performed miserably because I've seen the statements from that group out there. So whether it's the Goldman Sachs, whoever it is out there, they're keeping that money fully loaded inside the market, and so people are rotating into trying to take some type of defensive plays or things that are doing well that maybe during a decline won't do as poorly out here. And I would say that probably is what's going on with inside the Facebook chart as we take a look at it. But I don't see any reason to rush out and buy Facebook. So folks, stay tuned. Our man David White, that squeezably, lovably soft David White, I suppose that's Charmin out there, is going to be up next. Have a terrific Thursday. Look forward to seeing you on Fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.